Tax Tips Tuesday on 1059 The Region.
With tax season just around the corner, KPMG will be here every Tuesday with Tax Tips Tuesday to help us get us started as KPMG and Canada's tax partner, Deol. Dal, how are you?
I'm doing well, Jim. How are you doing?
Excellent, excellent. Everyone is looking to reduce their tax bill, so you're here today to tell us about some ways we might be able to do so.
Yes, absolutely. I'll focus on tax credits, which may help lower your tax bill. I'll also speak to some of the popular tax credits for Ontario residents, including donations, medical expenses, first-time home buyers, and tuition fees.
Okay, I think a lot of the people heard of those. Let's start at the beginning. What exactly is a tax credit?
Most people are familiar with tax deductions. These lower your taxable income, which is a portion of your total income that you use to calculate how much tax you owe. A tax credit is different in that it's applied after you figured out how much tax you owe on your taxable income, and it's deducted from that amount, which lowers your overall tax bill. Most of the credits in Ontario are non-refundable tax credits. This means that if the tax credits you're eligible for are more than what you owe, you don't get the extra tax credit amount as a refund. So if you owe $100 in taxes before you apply the credits, and the credits are worth $120, you won't get a refund of $20. You'll just pay zero taxes.
Okay. Hence the name non-refundable. So, Dal, what are some of these credits?
I think one of the ones that people are most familiar with is the credit for charitable gifts. And there are a few important things to keep in mind here. First, the organization you donate to can only give you a receipt if it's registered with the CRA as a donee. For example, donations to registered charities are eligible, but donations to a GoFundMe page are not. If you're in doubt, there's a list of registered donees on the CRA website. Secondly, if you get something back for your donation, you can't claim the whole gift. So if you make a donation at a registered museum, but you get free admission as a result, you'll only be able to claim a portion of the amount donated for tax credit purposes. The donation receipt should show the eligible portion. Finally, you can only claim donations up to 75% of your net income, but you can carry forward the unclaimed donations for 5 years and still get credit for them.
Well, that's helpful. I mean, a lot of us make some donations to various things through the year. What are some others?
Well, there's a first-time home buyer's tax credit and one for eligible medical expenses as well, including prescription drugs and glasses. An interesting feature of the medical expense tax credit is that you can claim expenses for any 12-month period that ended in 2021. There's also a tuition tax credit for courses taken at Canadian and some foreign higher education institutions. A key point on this one is that after the student uses a maximum amount of the credit that they can use to reduce their own taxes, they can transfer any remaining federal tuition amount up to $5,000, and maybe some of the provincial amounts as well, to their parents, grandparents, spouse, or common law partner.
Are there others you haven't mentioned?
Yes, absolutely. So please be sure to look into the ones that you might qualify for. The CRA website has a list of credits that are available.
Right on. So there you have it. Make sure you look into tax credits and you might save in your tax bill. Thanks for the tips, Del. That was awesome. We'll talk again soon. If you missed next week's or last week's Tax Tip Tuesday, go to our Twitter feed at 1059 The Region. As always, their amazing website, kpmg.ca. Thanks, Dal.
No problem at all. Have a great day.
Tax Tips Tuesday with KPMG in Canada on 1059 The Region.